All right, team, this is your midweek sit rep. Let's go ahead and talk about used stocks charts and get into some hot news. All right, so here's how your markets closed. Green across the board, but man, we saw some lows coming into the very beginning of the market, and then we saw a nice rally going into the end with a sharp decline getting real close to the bell. So it'll be interesting to see how we open tomorrow once that bell rings. Here's a picture representation of the broad index. Guys, you can see what was really popping today in green. You can also see what was struggling in red. Energy sector for the most part and financials really were the struggle, but we had some big boomers from some of those large market caps that definitely were pushing the indexes. Here's your ETFs picture representation. Guys, the inverse ETFs did not do so well today, as well as energy and financial sector. Those were struggling, but we did have some glimpse of hope and stuff out of there. SPY, of course, was kicking it. The Qs was kicking it. The healthcare was doing this thing. So we're definitely paying attention to some of these as we move through the market week. I am paying attention to the red ones because I always love to play off of rejection and off of reversals. And the red ones offer us a nice area for some momentum to the upside if we can catch some good volume and some good catalysts pushing them. Sector performances, like we were talking about, energy was the big loser, and we had utilities and technologies carrying the most of the weight on the indexes. Calls versus puts. Puts are leading the way a little bit, edging out the call volume, but definitely we're paying attention. We're watching a lot of these tickers and seeing how they react once the bell rings and how they'll close out the rest of this week. Here's your futures. For the most part, we're green. Guys, remember, my theory on futures is we use it not as gospel, but more as an idea to get a plan in action so we can go out there and have some sort of battle plan for when we attack the market. New thing I figured I would go ahead and push in here. These are some signals, basically some TA setups and some stocks that go along with it. There's a lot of just them out there. I like to pay attention to the wedges, and I also like head and shoulders plays. You see in the wedge we got McDonald's, and then head and shoulders we got AZO. Those are definitely a couple of the ones that I'll be paying attention to. I see a few other tickers in there. Channel down, you got Charter. Double up, you got DLN. I like those as well. So definitely some winners, some losers, and some cheaper ones, but we'll be paying attention to these and see if we have any technical analysis that follows up with the trending stock and how they play out as the market rolls on tomorrow and closing out this week. And I don't know about you guys, but I am paying big attention to the penny market stock, guys. I'm watching these and making killings, just little cheap plays, man. When you got a stock like XELA, that's 11 cents, and you go in deep on maybe 1,000 shares at 11 cents a share, and it pops up to 15, guys, that's money all day, and that's easy. It could do that in pre-market, it could do that in after hours. You just got to pay attention to these penny stocks and just play off the volume. And here's your Tendies index. Guys, if you don't know what the Tendies index is good for, I'm going to go ahead and put a little slide in here so you guys can read up on it. But basically, it's a good representation of some historical data that gives you some decent trend lines of liquid stocks that have high potential to go ahead and make some moves and end positively on the run at the end of their expiration. So I'll give you a definition here so you guys can do your own research and get used to utilizing the Tendies chart if it makes sense for your trading style. So for those of you that are not familiar with what the Tendies index is, it finds all the weekly out-of-the-money options with good liquidity and assumes that the stock will hit a reasonable price target based on the stock's past 10-day price movement. It uses a modified ATR, it's called a not true range, and if the price target hits, it divides the option's intrinsic value and gives the Tendies index. So how I like to use this is I like to use this as thought-provoking ideas for trades. Okay, I'll use it. It'll give me some tickers. I can start doing some DD, and I can find out ones that have the volume I like, have the patterns I like, have the trend lines I like, and then I can start developing a plan of attack and keeping them and put them on my watch list. So if this helps you out, I hope you check it out and do a little more research on the Tendies Index, because if it can help you make money, then it's definitely something worthwhile and paying attention to. So big news is the Fed's fear of entrenched high inflation fueling big rate hike, and these are what the minutes are showing. I was a little surprised at the rally in the market, because the Fed minutes actually, to me, when I was listening to them and reading them, I actually kind of got the bearish sentiment long term. I didn't get a bullish sentiment. So I was a little surprised at how the market kind of rallied towards the end. But basically what I'm thinking is that we've been kind of, teetering out at this bottom, and there was just a lot of influx of money being put back into the market, kind of cycling out of oil, going into tech. And I think that we saw some of that, booming in the past couple trading sessions. But definitely towards the end, you kind of saw reality sink in, and you saw the downward trend starting again. I do think we continue to go lower, and I am bearish near term and a little medium term as we continue on in this inflation crisis. So basically, Wall Street ends up as investors absorb the Fed minutes. So Wall Street put a seesaw day behind to its close higher on Wednesday, as investors kind of digested the new clues on the U.S. central bank's approach to rate policy and its inflation fight. So that was kind of the catalyst that kind of saw a little bit of spark going into the close of the bell. However, we saw that sharp decline, and I just want people to be prepared. I do think we're still going to be coming down, and I don't want people to be bag holders and get caught in bull traps, especially when things rush up very quickly. You hop on the momentum train, and then all of a sudden, boom, the selling starts happening, and it causes the cascading effect from, trailing stop losses, and automatic put contracts coming in deep. So just pay attention then, just be careful when you're out there trading. And this story is just talking about the dollar, and it's continuing to go and just go. And reports are saying that there's little that stands in its way. The U.S. dollar will remain strong, at least for the foreseeable future, due to the aggressive Federal Reserve interest rate and expectations on safe haven appeal stemming from global recession fears. Guys, I want to hit that key: global recession fears. Okay, so we're not just looking at a potential recession here in the U.S. We're looking at a global recession potential. So definitely keep that in mind when we're trading, because it's not just us that's, being affected and looking pretty rough and stuff like that. This is, across the world, things are slowing down. There's issues all over the place. So we got to take that in consideration when we're looking at the stock market, to get a total stock market view when we're looking for things to go attack. All right, stocks and things I'm watching to close out this week and a little further out. Can't talk about the market without talking about SPY. Guys, I love trading SPY. And if you guys aren't trading SPY and you don't have this in your arsenal, you guys need to start paying attention to the SPY, okay? If anything, you should at least have a SPY chart open as you're looking at your other NASDAQ stocks, because I know you guys are trading those NASDAQ stocks as everyone else is, and definitely those stocks, a lot of them for the most part, are following along with the SPY, okay? So you look at the SPY on the 15-minute chart, you see if it's bullish or bearish. You look at your regular stock that you're looking at on the 5-minute chart, looking for a good entry or exit point, and you can make some money. But guys, SPY is a day trading dream. We've been making a killing on it. SPY definitely went, took a little tumble. We made some money on the puts. It went to the call side. We went ahead and made some money there. We still got some swing puts out, because I do think it's coming back down. I think it was a bull run the past couple sessions, and then we're going to get that resistance where we're at currently. Maybe peak a little bit when the market bell runs at opening, but then ultimately we're going to hit that resistance wall, and we're going to start tumbling back down. And I do got my puts, and I think they're going to print. I got some 380 puts out there, and I got some 375 puts, and I think both are going to print by the end of the week. XOP, I like to trade this one as well. This is with the energy sector. When the energy starts to get some wind behind its sails, I like to go ahead and hop into some XOP trades, and I pay attention to XOP anytime I get into an XOM trade or a CVX trade or any type of energy trade. I'm paying attention to XOP, so I do like to trade this one. I think that we have a little bit of relief closing out this week, as some of the other sectors will go ahead and tank a little bit. I think energy's kind of tanked quite a bit already, so I think we have a little bit of relief. But ultimately, as long as we continue the course that we're going, we're going to start continuing to see these track back down. XLF, this is the financial sector, guys. I'm paying attention to this because we've been closing pretty tight in a nice little consolidation range. I do think that we're going to peak to the upside, and I don't think we got much upside here before we hit a rejection wall at the top, but I do think we're going to peak a little bit. I got about a $4 or $5 move to the upside that I think that's plausible. Looking at the MACD right here, we got room that we continue to go up, and the RSI, of course, has room to go as well before we start to get overbought. So I do think this got some move to the upside, but just like everything else, I think we're going to hit that resistance. I don't think we're quite ready to go ahead and break through and go on a whole surge breakout, and I think we pull back once we hit that top end resistance here, about a $4 or $5 move to the upside. Going into some regular stocks, GME is trending hard, guys. So paying attention to GME, I still think that we got some downside in GME, but it tends to reverse from this particular level where it's at. So I do think that, we kind of got a triple bottom here recently. We're going to go ahead and hit this bottom, and we're going to go ahead and peak from here, and then we'll probably hit that resistance up there at the top, and then we'll come back down and start trading in this range. So I do think we got a little bit of upside on GME. It's extremely popular, extremely volatile, and from these levels, people like to throw money into it, and we'll see a little bit of volume come and push it to the upside. VERU. Now this is an interesting stock. I actually think that we're going to probably come back down a little bit. If you look at the pattern that we got this sideways W, and anytime I see a sideways W, I always think that we get a little sharp pop to the upside, which we did today, and we probably may get it at the bell tomorrow. But ultimately, usually when I see the sideways W, that's usually a sharp pop to the upside with a dramatic decrease, clearing up all of the gains that it made and going to a recent new low. So I am bearish on this one moving into the closing of this week. Apple, I think we're at about a peak where we're going to see this heavy resistance coming, and I think that we close lower than we are currently closing out this week. So I am bearish on Apple short term. I'm long on Apple always. This is the opportune time to go ahead and buy shares and go out long, but if we're trading on the option thing, I do think we got a little bit of downward motion, and we can go ahead and make some money on some puts. Closing out this week, $142, $143 puts are looking really juicy and priced right to close out this week pretty strong. AMD, it's still trending below its EMA, and we're looking like we could potentially be at a near bottom here. This will run with SPY, so if we get some volume going into the AMD, especially into semiconductors, we'll see pushes. AMD is a fantastic trade to go ahead and trade on the day. It moves about anywhere between $3 to $5. You can definitely make some money on some calls and puts, riding it both ways. So for me, this is one of those that I'm not really looking to swing this trade as much as I'm looking to see how this looks in pre-market, and I want to trade it as a day trade once the bell rings and see if I can make some money off of the trend. All right, Amazon, kind of similar situation with Apple. I think Amazon got maybe a little bit more juice in it, but it's going to hit a top level resistance, and we're going to see the pullback. We started seeing it kind of, slowly trickle to the upside and kind of doing a little broadening. I think we continue to the downside. I got some 113 puts out there, and I think that those are going to print by the end of the week. Tesla, man. Tesla is just one of those that just won't stop moving around, and I do think we still got some downside on Tesla closing out the week lower, but Tesla is just one of those you just can never count it out, man, because this thing could all of a sudden get a crazy vibe on it, and you just see it boom and shoot up $50 to $75. Okay, so paying attention to Tesla, another one of those that I'm liking to day trade. I've been burned a few times on some swing trades. I do got some out of the money puts on this one that expire this Friday, so I'm hoping we get that downward pressure on Tesla so that I can come out of my trades with at least some green, if not hedge some of my loss that I have currently going on. It's not a loss until the fat lady sings. Well, if the fat lady doesn't sing by Friday, it's going to end up being a loss. So I needed to come down a little bit so I can make some money, and then I'll start riding some calls on the volatility to the upside. Bank of America, it's about time, man. When you start to see the financial sectors kind of come back around, Bank of America is definitely on my list. I'm picking up shares, especially at Bank of America at this price now, getting my position filled out for a long hold. But I like to trade options on this, but I want to wait. I'm more of a bullish option trader with the financial sector. I just need the financial sector to have more of the bullish sentiment before I start going long on these particular stocks. So I'm holding right now, but I'm paying attention. Another one I'm paying attention to is Wells Fargo's, JPM, and once I start to see some of that volume come in and some of those buzzwords hitting with the financial sectors, I'm going to start paying attention. And again, also paying attention to XLF to see a general sentiment of where the financial market is at a current point. And finally, let's talk about Meta. Meta, very similar to Amazon and Apple. I think we got a little upside potential when that bell rings, and we're going to hit that resistance point at the top. I don't think we have the juice right now to go ahead and break through dramatically to the upside. I think if we break through these resistance points, and this goes for Apple and Amazon as well, it's going to be short-lived. We'll probably wick out to the top, and then we'll pull back dramatically, to the downside. So I'm definitely looking more bearish on this one short term. Obviously, at this price, though, this is a steal, in my opinion, to go ahead and start filling out your positions for long holds and getting shares. But I am playing the option game on this as well, and I am betting that we got a little bit of more upside pressure, and then I'm going to start riding some puts down for a good probably $2 to $4 movement to the downside. All right, team, that's the video. Hope you got some value and worth out of it. Come check us out at traderswarroom.com, guys. We truly have something for everybody, every budget, every style, every type of trader and investor. Come check us out at traderswarroom.com and see what we have. I want to remind you guys that we're looking at the stock market like a war zone. Stocks and sector, those are our battles. We do it together as a team. Attack, conquer, and destroy, and we're always going to war. If that sounds like something you could rock with, then all I got to say to you is follow me, and let's go to war together. Later, y'all. I'll see you when the market rings.